cover this morning's other top story for you, and this is the continuing crisis in Ireland. The head of the nation's central bank says a substantial loan is likely, one big enough to prove that Ireland has enough firepower to handle any problem. Bloomberg's Elliott Gotkine is with us now from Dublin. Elliott.
Deirdre, morning. Yes, well, officials from Ireland, from the European Union, the IMF and the European Central Bank are pretty tight-lipped about whether Ireland would accept a bailout and if so, what form it would take. They've been very much dancing around the issue, but today, Patrick Honohan, the head of Ireland's central bank, the first official to publicly come out and give us a hint of what is likely to come. Perhaps, in fact, he's let the cat out of the bag.
The intention is and the expectation is on their part and personally on my part that the negotiations or discussions will be effective and that a loan will be made available and drawn down as necessary.
Now, that amount worth tens of billions of euros, says Patrick Honohan, but also the key word in those comments from him, his expectation. This is not a done deal. This, he says, is not even his call. But as Ireland's central bank chief, one would assume that he has his ear pretty close to the ground and that the mere whiff of a bailout, as we have seen, the markets have reacted. Ireland's implied borrowing costs on the bond markets have come down. They've been falling towards the 5% interest rate that Patrick Honohan says would be attached to that IMF EU loan that Ireland would take. The other thing he was very keen to point out is that this is not a bailout, it's a loan. I'll leave you to decide what exactly is the difference between those two. Of course, we don't know yet what conditions, if any, would be attached to this bailout if indeed it does materialise.